Hey, Adam Hooksema here from ProjectionHub, and in this video I'm going to be walking through our Mexican restaurant financial projection template. I'm going to walk you through how to fill this out really step by step, and this is going to be a good fit if you are looking to try to get an SBA loan or maybe raise investment from potential investors and they've asked you for a set of financial projections. That's what we're looking to do with this template, is we're going to help you create those financial projections. A little bit of my background: I was an SBA lender for 12 years and made about 1,500 SBA loans during my time as executive director of an organization called Bankable. And so with that experience, I started ProjectionHub in order to help people create financial projections, help them with business plans, and ultimately help them walk through the SBA loan process. And part of that is the financial projection process. So I'm going to walk you through this template. I'm going to put a link in the description of the video below to this particular template so you can grab that and follow along. And also, as a thank you, if you stick around to the very end of the video, I'm going to give you access to a coupon code that you can use to take a discount on this particular template. All right, with that, let's go ahead and dive in to show you how this works. All right, so I'm going to start here on the at a glance tab, and this is kind of the end of the process. So once you've entered in all of your assumptions, you're going to get some nice charts and graphs and tables that you'll be able to put into a business plan or in a pitch deck for potential investors. You'll get a 5-year income statement summary, a 5-year cash flow summary, a 5-year balance sheet, and then the income statement, cash flow, and balance sheet all broken down month to month for each of the 5 years. Now, this is what you're going to need if you are looking for an SBA loan, but in order to produce all of these reports, we have some work to do to enter in our various assumptions. So the first thing you need to know is that any assumption that is highlighted in blue, or any field that's highlighted in blue, is an assumption that you can change without breaking something in the model. I am going to assume that this is a new Mexican restaurant. It's a startup. We're going to assume it's a startup and that we're looking to get an SBA loan to help cover the startup cost. Okay, so the first thing we're going to assume here is that our starting cash balance is 0 because it's a startup. We're going to assume that we're going to make a personal investment of $30,000 and invest that in month 1. Accounts receivable, we're going to assume 100% for this assumption. You can just leave this as it is. The idea here is that you'd receive 100% of your sales in the month that you sell the product. So you'll get paid right away, basically. On the accounts payable terms, we're going to assume that you pay 80% of your bills in the month you incur the expense, 20% maybe you put on a credit card. So you might pay for fuel or you pay for supplies on a credit card, and then you have a month to actually repay that credit card balance. And then for inventory, we're going to assume that you start out with $2,500 in inventory, and I may actually bump that up to $10,000. Let's say we're going to start with $10,000 inventory with an average inventory carried as a percentage of sales as 10%, meaning we're just going to carry some inventory on the balance sheet each month. In terms of startup costs, let's say you're renting a space and you need to do some leasehold improvements or some improvements to the space. So we're going to spend $75,000 here on leasehold improvements, and you can just leave these life expectancy probably as they are: 10 years for improvements in equipment and furniture, 5 years for signage. We set this to month 1 for all of these items, meaning you're spending this cash in month 1, kind of at the start of the projection. We have a budget of $45,000 for equipment, $20,000 for furniture, and then $5,000 for signage. And then we have an SBA loan down here for $270,000. So between your $30,000 in personal investment and your $270,000 in SBA loan, you'll have a kind of total funds of $300,000. Typically, an SBA lender is going to require you to put in at least 10% of the total project cost as a down payment. And so that's where we've got this $30,000 coming from. And then we're assuming a 10% interest rate over 120 months or a 10-year term. So next we're going to look at our revenue tab. And here we're going to assume an advertising budget of $5,000 in the first month and then $3,000 in the next couple of months, and kind of dropping down over time to where we have kind of a regular monthly budget of $1,000 a month. We're assuming our cost to acquire a new customer or new visitor is $10. So maybe you're sending out coupons in the mail or maybe advertising on Facebook or Instagram, trying to drive new customers to the restaurant. And then we also have an assumption of new organic visitors, or just customers that are through word of mouth, or maybe they saw a good review or they heard a friend talking about the restaurant. And so we're assuming the first couple months, maybe higher visitors initially when you first open, and then that kind of dwindled down over time. So we have a negative 5% growth rate to kind of drive down those new customers, because eventually everybody who will want to try your restaurant will probably have tried it. So it'll be harder and harder to get new customers each month. This will then project your total new visitors. Then we can assume some percentage of those new visitors become regular customers. So we're assuming that 25% here share of those new visitors become regulars. And we're assuming here that 5% of your regulars end up leaving each month. So then this row here is going to calculate the number of active regular customers that you have. And the reason that's important is because your projections are going to be based on number of visitors, but that's both your new visitors plus kind of those repeat visitors that come back again and again. And so we have an assumption here for the number of visits per regular per month. So if you have those regular customers that come back every month, we're assuming that they come back once a month. If you think your regular customers are going to come back maybe 2 times a month or 3 times a month, or maybe they come back weekly, you could always increase this number. But this ultimately helps you determine how many customer visits you're going to expect in a given month. And you can see how many per day and per hour that we would assume here. And we put in some menu items. So we've got some different menu items here by default with some example pricing. We set the cost. So this is the cost for you. How much does it cost you to the ingredients for the appetizer, for example, or the ingredients for the tacos? So this is what you're charging to the customer, and this is what it's going to cost you in terms of the food cost. And we set this as a calculation. So we set it to be 35% or 0.35 times the price. So 35% food cost is what we're assuming here. And you can, of course, change that. And then this assumption here is the average number of purchases per person per visit. So in other words, the way you can think about this is saying if it says 0.15, that means 15% of visitors are going to get an appetizer. 40% of visitors are going to get a taco. 35% are going to order the burritos and enchiladas, right? You can see all those different kind of percentages built out there. So the average number of items per person per visit is 1.75 items. So maybe they get an appetizer and an entree, or an entree and a drink, for example. And then this is the calculated average order per person is $15.55. And we can set an annual growth rate for inflation here of 3%. And that ultimately calculates your food and drink revenue and your food cost. Now we have some assumptions about direct labor here. So you can set the number of hours you're open each week, how many days per week, how many hours per day. And then that will help us determine what kind of employees we're going to need. So we can say the number of minimum employees per operating hour. So we say we're going to need at least 1 line cook, 1 prep cook, 1 dishwasher, 2 servers, and 1 bartender for every operating hour that we're open. Here's our estimated hourly wage. We're going to pay them the tax cost. And then this calculates the maximum number of orders per hour that an employee can handle. Okay. So we're saying that a line cook can handle basically 20 orders per hour. If, for example, we were able to calculate down here based on all the assumptions above, how many orders do we think we're going to have based on the number of customers? How many orders are we going to have per hour on average? And if this number exceeds a certain level, so like once it hits over 20, if it were to hit over 20, then we'd know, okay, that's exceeding the maximum number of orders that a line cook can handle. And so we need to hire an additional line cook. And so it will automatically, the model will automatically add those additional staff as needed. Here is a catering revenue section. Let me just take a pause here and mention, if you are feeling overwhelmed at this point and feeling like, oh, there's a lot here, I really just want to be able to tell someone what I want to do and have them customize and fill the model out for me, that's something we can do. So we can do all of that for you. Feel free to reach out to us at support@ProjectionHub.com, and we can just handle filling the model out, getting it ready for a lender on your behalf. I do want to continue though and just kind of show you if you are trying to do this yourself and how you can utilize the model. So we have the ability to add catering revenue. So here's the number of catering orders per month. We expect 2 catering orders per month, the annual growth rate of 5%. And we're thinking large catering orders. Okay, so we've got a $3,000 order here. We're going to cater a large event is kind of the idea here. And then you can set an assumption for the average food cost and labor cost for each event. And we'll calculate our catering revenue and food and labor cost. Let's move on to our operating expense tab. So here we can enter in our different operating expenses. We can set them in different categories. So is it sales and marketing, a building expense, is it a general and admin expense? And then we can set whether the expense is a percentage of revenue, a fixed dollar amount, or a per employee expense. Things like transaction fees or credit card processing. So we'll call this one credit card processing. That, for example, might be 3% of revenue. So we selected the percentage of revenue dropdown and we enter that in as 0.03, which means 3%. In this example, the model will automatically calculate your credit card processing fees. And then finally, the last tab is our salaries tab. So we can add different salaried positions. We can set their salary, their employer taxes, the benefits if we're going to offer benefits for the salaried positions, and then what month these positions are going to start. So let's say maybe you're going to start taking a salary as the manager or the owner in month 1, but maybe you're not going to bring on an assistant manager until month 18, maybe a shift supervisor in month 20, maybe the kitchen manager manager doesn't start till year 4, month 37, for example. And then ultimately, this brings us back to our profit and loss at a glance here, and we can see kind of the output and example. So in the first year, based on the assumptions we have, we're just breaking even. In the second year, we're ramping up to $100,000 net income for the year, and you can see that kind of in that 10% net income range for the restaurant. Hope this has been helpful. If it has, I'd love it if you like the video, subscribe to our channel. We produce a lot of content on financial projections and business plans and helping people through the SBA loan process. And so we'd love for you to subscribe and follow along. Also, as a thank you for sticking around to the very end of the video, if you go in the description of the video below, we're going to put a link to a form. If you fill out that form, we're going to send you a coupon code to be able to take a discount on this particular template as our thank you to you. All right, I hope that's been helpful. If you have any questions at all, please don't hesitate to reach out to us at support@projectionhub.com. Thanks.